What's good, everybody? Happy Monday. How's it going out there? Hope you're having a good day. The stuff will be with you momentarily. It's just rendering and coming up there. But hey, man, it's Halloween. Happy Halloween. I'm dressed up today as a rock star. I wanted to be Louis Armstrong, but you can't do that, man. So got the tattoo sleeves, got the nose piercing in there. That ain't real. And my Blink 182 shirt, man. If it weren't for their ridiculous prices, I'd actually be going to that concert. But I don't know who they think they are, but geez, those ticket prices are insane. I love it. So happy Halloween. Hope you're having a good day. I'll be quick today because I know a lot of you probably got to get to the trick-or-treating, taking the little kids out and whatnot. And really, this week is, focused around the Fed. We know that Wednesday is the big day. We know that it's likely going to be 75 basis points that they raise rates. Yeah, we're all pretty much good with that there. The target Fed funds rate's going to be what, 3.75 by 4, so it'll be right around in there. And really, we know that, right? So the focus is going to be what comes next. Yeah, Fed, you did 0.75 of a point. We knew that. We expected it. What do you got for us next, right? So that's the focus because there's been little leaks here and there of maybe they won't raise rates as fast. Maybe it won't be such a big deal there. Maybe they'll go to a slower pace of 0.5 percentage point in December because they'll meet again, right? So there'll be one more before the end of the year. And if that's the case, then isn't that good news that they're slowing the pace? They may be able to sit back and kind of hold out and see what's going on. I don't know. We'll see what happens there, but that is going to be the focus. So tomorrow, as you get into the afternoon, and Wednesday morning especially, if you see the markets kind of flatline a little bit, it's kind of a tough time to be a day trader, short-term trader, tough time to put on new large positions. You kind of got to just sit back and wait. So SOH, as they say, which just stands for sit on your hands. And we're financial advisors here at Jazz Wealth. We've been sitting on our hands with 30% cash since last November. We'll talk about that a little bit more, but last November, we just started selling little by little. So hopefully your advisor's in the same camp. I've actually seen some advisors that have been all cash. Good for them. But no need to really do things like that. So I hope you'll check us out, jazzwealth.com. We're going to go on over to the charts and take a look and see what's going on here. Here's the S&P. I'll extend this line a little bit now that the days are passing. We got a slight pullback here today, but not really much to worry about there. A little end-of-month selling maybe, so you could lock in a profitable month for those that had a good October. Of course, October was a good month there. The S&P up 6.5% for the month as we make our way back to what is presumably the top of this downtrend here, aka the 200-day moving average, which would be the focus there. So it's more likely today, if you're looking at this selling pressure, you go, what's going on? More likely interest rates. That's probably all that happened. After hours, they're up a little bit. But you got rates ticking a little bit higher again. So remember, as price goes up, interest rates go down. Well, we have prices pulling back over the last 2 days there. So you've got that hitting the already beaten down tech names. That was a rough week last week for them. So it just gives people an incentive to say, well, there's no real reason to go buy some of these big tech names there. Now, I will point out, still working on that, that so when there's earnings season, companies are not allowed to buy back their share. They're not allowed to do discretionary buying, right? And there's a lot of stocks that are buying back their shares right now. So there's a little bit of a pause there through earnings season. Well, more than half of those companies are now done and through their earnings restrictions there, so they can start buying back their shares. And buybacks are running at a pace that's double that we've seen compared to last year. Well, that could help fuel the rally a little bit. Remember, share buybacks, that's a lot of money going into individual stocks from the individual companies. Well, that could help raise things up a little bit there as well. So I don't know, a little bit to look at there. There's some, light at the end of the tunnel, as we say there, but that's where we stand at the moment. So looking over at the S&P, we're still kind of in no man's land. We're about halfway between the lows and these highs here. We understand that. The Dow finishes up, so the Dow actually finishes up the best. That was the best October performer. I actually don't know. You could use the research site and check this out, but I don't know the last time that you see the Dow gain 12.8% in a month? That there is not normal, mister. So yeah, something to take a look at there. I'd actually be curious to know what's going on there. Anyways, the Dow was the best performer throughout the month, and I'll point out the Russell 2000 actually squeaked out a little bit of a gain here today. That's the second best, 10% rally off of lows. Small caps Um, uh, Small caps are not exciting. I personally find them really interesting, but most people don't find small caps very interesting. And so I just realized I still have this thing in my nose. Um, I find them interesting, and apparently a lot of people are starting to do that because small cap core or like small cap index type broad based buying has been doing really well through the month of October there. In our notes from Jazz here this weekend, I do want to point this out real quick so you can take a look. It'll be something you can work with here as well. Just move this guy into here a little bit. This is what it looks like. Every weekend I write a letter here, and we're talking about all kinds of stuff, but I want to point this out to you here. Bear market rallies. This is one really simple chart that tells a whole lot of data. I'll give you one of them right here. So what we're looking at is the duration and the amount of a rally in bear markets and bull markets. So over here on the left, a bear market rally averages about a 13.6% gain. I've often told clients double-digit rallies. Actually, you go back a couple notes from Jazz emails, I showed every single one of them from bear markets just to show these bear market bounces are no joke. Well, a bull market rally is only a little bit better. It's kind of interesting. You say, well, cool. I'll take either one at this point, right? But that's where you stand. Now look at the duration. The average number of days a bear market rally of double digits or more lasts is 59 days, trading days. The average bull market rally of basically the same amount is almost double that in duration. What's that tell you? You could look at that and say, oh, okay, bear market rally, we get about 13%, I'd be happy with that. Maybe over the course of a couple months, we're happy. No, that tells you that bear market rallies, in order to achieve the same amount as a bull market rally, they got to be swift and violent and quick and just get it done, man. So bear market rallies make you think that's the bottom, right? That happened earlier this year, right? Look at the S&P. Well, let's go back to the S&P. Look at the S&P here. Oh, that's a major, almost 20% rally off of lows. Bear market rally. Short in duration, but, not small in terms of returns there. So the meaning that I want to share with you guys here today is bear market rallies, obviously much quicker, much sharper, nastier, right to the upside there. Bull market rallies are slow. They're the turtle race, man. We're going to average a 14.5%, but give us some time, man. We're going to take some time to do it. Very fascinating. There's a lot more that I was going over in the notes from Jazz here this weekend, which, by the way, was more focused on, more than just the market update. We're trying to include more things, personal finance and all that great stuff as well. So if you're a client, you want to check it out. If you're a research member, you can do the same there. Bear market rallies tend to be quick, and that's what we're getting right now. So especially in the Dow, look at the Dow. That's not abnormal. The Russell, not abnormal. The S&P, not abnormal, but not really average at the moment, but it's working on it. So something to keep in mind. Anyways, back over to the charts here. Let's take a look. So I already talked about interest rates for the day. So interest rates rising just a little bit. They're going to be kind of tied in a small range, if you ask me, until the Fed announcement there. So whether you're looking short-term or long-term, if you see kind of a choppy sideways range, that'd be totally expected. You got oil falling back here just a little bit, working on the higher low, sluggishly, I would say there, but there's also a lot of news wrapped around that at the moment. I think Biden was out today. I don't know if he actually did it or not, but he was supposed to give a conference. I read about it this morning where he was going to talk about really push oil companies and kind of threaten them to, hey, lower the price of oil and all that. It's all political at the moment. There's going to be a lot of that. So you just got to know that that's part of the game. If you were in that game, you'd play it too. We got gold. Well, what happened to the inflation hedge? Right? Wasn't gold a hedge for inflation? Zero hedge. Like, it's a losing proposition to try to use gold as a hedge. I feel bad for people that did that. However, that's a myth. Gold as an inflation hedge statistically is a myth. It make you feel comfortable, but it's not technically true. You've got 7 straight months down for gold. I didn't know if that was odd or not. Turns out that's never happened before. So gold falling 7 months in a row is actually sets a record there, despite trying to be the inflation hedge there. I'll have some stats for this on you tomorrow to take a look, because not only do we have a record here for gold, but we've got Newmont reporting earnings tomorrow. And what do you think they do? What do you think they do? Well, yeah, you guessed it right. Right? You guessed it perfectly right there. Hey, in our Wine and Wealth class last week, we had Eric talking about changes to the IRAs and to everything else for 2023. By the way, I just want to share this with you. A couple clients had asked about this. You could just go here. The classes are all chronological. They just go and go and go and load, and there's just tons of classes there, right? But you could just go like this. Hey, I only want to see Wine and Wealth classes, right? I only want to see really geeky stuff. Right? I need the basics, right? You can sort by that. So I just wanted to point that out. And enough of that. We'll cover the rest of that another time. You ready for a simple lesson of the day? I just want to get you thinking, right? Quiet times in the market get you thinking. Quiet times in the market get you analyzing your strategy. How you doing? Quiet times get you analyzing your portfolio. If it's long term, what's it doing? Is it keeping up? Do we need to make some adjustments? Quiet times get you strategizing about maybe things you could add, not stocks per se, but maybe a strategy you could use. Like, for example, during quiet times, day traders might go analyze playing breakout gaps versus playing momentum, right? And that's your time, right? It keeps you off of the platform there from doing something silly. So here's a simple lesson of the day. We can expand on this if you'd like. Maybe we'll do a poll or something. If and when eventually the economy does slow down, think about that. If it's not now, or if it's not currently happening, which looks pretty good right now, but if it does eventually, and when it does eventually slow down, which group of stocks perform the best? If you had to guess, right? I would have guessed wrong. I'm kind of digging into this, playing around a little bit here, but don't think sector like tech or industrials. Don't think commodities like gold or oil or whatever. Think of groups, stocks with the highest dividends, stocks with the best year-to-date gain, maybe stocks with the 5% or more earnings growth year over year. You can go fundamentally, technically, stocks that are over their 200-day, stocks that have not been over their 200-day in at least 200 days, and maybe now they're breaking above. You see, there's a million things you could look at there. But it's really simple, right? And this is not new news, so if you're one of our clients, we're already doing this, right? We've been doing this for a while. So it's not new news to me, but it occurs to me, I take some of this for granted. Stocks returning cash to shareholders in the form of doing buybacks and increasing their buybacks, by the way. So if you were to scan, without telling you what stocks to buy, because I can't do that, if you were to scan, you would say, hey, scanner, I would like you to show me stocks doing the most buybacks and stocks that have increased their percentage of share buybacks year over year for the last year. And if you want to go further, you can. Marathon Petroleum is a great example, right? So real quick, Marathon Petroleum, this was the kind of the popular one here in 2022 because when Warren Buffett bought Occidental for them doing what they were doing, Marathon people thought was next because he mentioned buying stocks that are really heavy in share buybacks there. If you look at Marathon Petroleum, well, now we can actually go back and calculate the returns or the total yield based on share buybacks. It's 22%. In other words, the stock would be, I don't know, what is it, up 70% for the year? It'd be 22% lower if the company wasn't buying back stocks. So thank you for buying back your stock, right? We're obviously very happy for that. They grew their buyback year over year by 900%. So that's a winner. That's the top one. There's nobody else that's done that more than Marathon Petroleum, right? So no wonder, right? It's doing well. Stocks that are buying back shares and increasing the amount that they're buying back do the best there. AIG would be another example, but we're just not to pick favorites and make it look like we're cherry picking. This stock is actually flat for the year. If you can't see it clearly, here's the close from today. Then just go all the way over here without trying to move that line. That is the open. Oh, right here. Sorry, that's the open for the beginning of the year. So it's basically flat. Well, if you look at AIG, we can actually calculate that it would be 13% lower if it weren't for their share buybacks. I bet a lot of you would take stocks that are kind of flat at the moment, but they've done a 760% overall increase. Well, picking individual stocks is all fine, but let's go through the real geeky stuff here. Here's the performance of the S&P if we segregate it by the use of cash for a particular company. So in other words, we built 3 portfolios and then segregated them, said, okay, Companies that are paid dividends, doing share buybacks, and had growth of their share buybacks, that's portfolio one. Companies that maybe paid dividends but spent money on growth, research and development, other expenses, that's portfolio two. Companies that chose to hold on to the cash and or use the cash to buy other companies, right? What's the performance of that? So if you were chasing companies that were out there gobbling up other companies, what would the performance of your portfolio be? Actually, that would be the worst performance here at the bottom, as you can see. Companies that spend money on R&D, these are going to kind of fall into the healthcare biotech space there, or general expenses. Well, not bad, but it's not great. I had to put it starts at 100, right? Because we obviously went negative. You can't make a negative, well, you can't make a nice looking negative chart. So that's them. What do you know? Stocks that buy back their shares and pay a dividend, and of course have an increase in the amount that they're buying back, perform the best. Even went so far as to break it up, because during weak economies down here, right, that's your clear winner. Companies doing R&D and expenses, companies buying other companies, that is not working, right? Although it seems like it would, they're buying at a discount. Yay, companies are worth less. Let's go gobble some up. The return that you get as a shareholder, not as good. If we look in here, there's only one time, right, after the dot-com bust, there's only one time where companies that spent money on general R&D and growth in that fashion there, which doesn't always translate to earnings in dollars, they perform the best over that one period. Otherwise, hey, what do we got here? Oh, we got a little bit of a recession in the economy there. What stocks are performing the best? Hey, look at that. Companies that are buying back stock. Where do we stand right now? Companies that are buying back stock are still performing. And over the long run, through recessions and all that great stuff, that's the ones that perform the best. So in other words, think about looking at those, right? If you think the economy is going to get weaker, you go, hey, I'm not telling you to buy AIG, but could have been a lot worse if they weren't buying back shares, and they plan to continue that in, I believe, a more rapid pace. I think they picked up their pace, actually. Well, that's a thought, right? Simple lesson of the day. Anyways, stocks in the news. Let's do a few of these here for you today. Get out of your way, go trick-or-treating and snack on all that candy and pass out cold, right? Halloween and Thanksgiving, the two nights you're able to just pass out on the couch and nobody gives you grief. Disney. Yeah. Man, you got to love their parks, but got some trouble. They're working on it. You know what I mean? I give them the benefit of the doubt. I'm a positive guy. They had to close down their Shanghai theme parks, resorts, all their shopping areas there. Absolute craziness there because of the zero COVID policy. Why the stock was not down is the same reason why it wasn't down when they closed last November and they closed through COVID. Disney doesn't actually own 100% of Shanghai Disney. That's not allowed over there. So in the US, if you want to set up shop and build a theme park, that's your theme park. Not in China. They do things a little bit differently over there. So it doesn't affect Disney like you think it would. But it is rather tough to watch a bunch of people realize they're about to be locked in Disney World and they try to run for the exits. May I be running for the rides. They kept the rides going, by the way. I watched a translated version of some of what people were dealing with there. So, you know, to be stuck in Disney until you can have 3 COVID tests prove you're negative. Ooh, that's a tough one there. Apple, Reuters, actually, this is their news. Said the iPhone production at the Foxconn plant is going to come down by about 30%. It's going to show production down by about 30% due to COVID. You got XPO Logistics. It's a good earnings report here, right? Better than expected earnings. Revenues were a little bit light here, but they got a lot of good things going. I found myself just keep reading and reading about what they were doing there. Total tonnage. That's one of their metrics, right, that they report there. Total tonnage up every single month last quarter when compared to the year before. That's awesome. That doesn't happen often with them. They expected to do the same thing through the fourth quarter. Well, I thought the economy was slowing. That's kind of weird there. They were also able to keep their prices high, which offset their added costs there. So if we're going to ask oil companies to lower their price, shouldn't we be asking these guys too? You know what I mean? Like, where does it end? Kind of a tough one there. Cool thing that they put out there if you work for them, quality loading. They're able to pinpoint the exact truck or box that was loaded up, and they can determine the quality of that loading. If the quality exceeds their expectations, well, the employees get a reward. If it doesn't, they're going to pinpoint exactly what it was, and they're going to address the issue there. So I thought that was pretty cool. Shows that they're, I don't know if you know these guys much, but they're real heavy on the tech side. So it's not just, moving stuff all the time. It's a tough one to buy. I'll give you that, because is the economy getting weaker? Is this just the last hurrah before that? So that's why you see people a little hesitant to buy. But today, that's why you see it had a good day. Very nice. Algin, well, speaking of buybacks, these guys just decided we're going to buy back $200 million worth of our shares. And we're going to do it quickly, too, because we don't know if we're going to have to pay the extra surcharge next year. So there's one for you. And there you go. Finally coming in here. ASML loaded up. Yes. Barron's, during the weekends, if you read Barron's or you're into that stuff, they do a lot of individual stocks analysis, right? So they'll go through individual stocks, make their case for bearish or bullish. Well, this one stuck out because they said it's got a 40% upside here. Demand is and will continue to exceed supply. So, if they're right, there you go. Anyways, like I said, probably not much to expect tomorrow in the afternoon, and then when we get into Wednesday morning until the Fed, then the fireworks can go off there, and we'll see what they say. Again, it's not so much the headline 0.75 or whatever they decide to do. It's going to be more about the speech that comes out afterwards, where everybody's going to be asking, is you slowing down, right? And that question will get asked numerous times. We'll keep an eye on it, see what they decide. I have a feeling you'll see a slight change in tone there. Yeah. All right, I'll take your questions if I can do it. You guys getting censored there? Yeah, there's words. YouTube has words that, the normal bad words, but if you type it, I think it blocks it automatically. We don't have like people sitting around, Andres, why Meta sell off again today? It's extremely oversold and was hoping for a rebound. It's extremely oversold, but due to a one-day move, right? Very tough to buy a stock after a one-day move. So let's go over here. When a stock is otherwise doing nothing and has a monster move one way or the other, you don't bet against that. It's enticing, right? And you look at it and say, okay, I do want to be a part of this, but you don't bet against that. That's like just getting started. So if this were to break, let's say it broke out instead, you wouldn't bet on it short after all that excitement, right? You'd say, well, chances are there's a little bit more. People are going to get excited and buy a little bit more, shorts cover, whatever. So you don't want to be counter trend just right away. Same thing on the downside. As soon as it gets smacked in the face, like you might one day, right? You don't just get up and walk away. You got to think about it, knock the cobwebs off, move the birds or whatever they call that. And so no hurry for that one, although I do agree that this is pretty cheap. They're not going to let this thing just get away from them. If I could be wrong, but it just seems like that's not gonna just bleed. I don't see that happening there. I don't know. I think many people would like an $80 price somewhere on that, though. I think a lot of analysts have adjusted their views on that as well. You kicking people out? What happened? No? Oh, I think the chat thing is blocking something that people are saying you blocking people. Oh, if it works or not. I blocked, did I put Bitcoin in there? It's supposed to block that. Oh, we put it in because of that. People put like, I made so much on Bitcoin on the comments. We're trying to get rid of the spam bot thing, but it's crazy. Yeah, it seems to be that the consensus right now is anything in the 80s for Meta is the most attractive it can get. And just like Financial Wisdom says there, it's enticing there. Down 1,000 on a long-term Meta investment, possible to liquidate it all, wait 30 days, buy it all back, may be able to get the write-off for taxes, avoid the washout rule. If you sell it and you buy it back on the 31st day, you can do that. You can, you want the loss on your taxes. I'm guessing that's what you're asking for. But you still get that. That's like my pet peeve. People don't realize you could sell it today, then just turn around and buy it again. You don't get to write it off on your taxes, but you get to add the loss to your cost basis. So just depends on what you want. Do you want to put it on the taxes? Do you need a capital loss on your taxes or not? But if not, then yeah, you can certainly add it to your basis. It doesn't do anything, right? It's the same as just holding it, but It can be done. So it's not the end of the world if you accidentally sell something and then come back and buy it, 25 days later and didn't know any better. But Marcus, I'm with you, man. I, those bots are a little bit annoying. It seems pretty obvious to figure out that they're automated too, so they just don't always go away. Yeah. Oh, we'll block that. If it looks like it's a bot thing, and it's kind of obvious because it'll be like a comment and then 15 comments below it, and it's like, yeah, just like, go do something else, man. Yep. Chinese citizens can't buy any ADS shares. They do got to buy locally, but they can buy contract for differences. That one they can do. At least as of like 5 years ago, they could. And that's typically the way they get around it. But yeah, you're right. They can't just move money into U.S. markets willy-nilly and be like, I'll just buy Alibaba over here. Yeah. Doesn't matter if you need capital loss. I'm tax. I'm getting them issue. Yeah. Yeah. A lot of people are, well, I'm going to get these losses one way or another. Well, good timing, right? When they raise the taxes. Yeah. I love it. All right, I'm going to wrap it up there. You guys go do your trick-or-treating. I appreciate you hanging out with me here today. I've obviously dressed up. I'm ready to roll. Let's go get some candy. We'll be back tomorrow, of course, to do this all over again, and enjoy the rest of your evening. Happy Halloween.